Right, welcome to this lesson on trading with trend lines with confirmation. Okay, a little bit of disclaimer before I move on. And when it comes to trend line trading with confirmation, I want to share with you two strategies. The first strategy is trend trading, and then the second strategy I'm going to share with you during the part 2 lesson. Okay, you gotta follow this sequence. Okay, first thing first, you need to look at the chart in a bigger picture. Is price making higher lows or lower highs? Basically, is price on an uptrend or downtrend? Simple as that. Is your 50 above 100, 100 above 200, or is it the other way around? And also make sure that you take note of where the price is as compared to the moving average. Is the price above or below moving averages? Then next, look at momentum indicators. Is it sloping upwards or is it sloping downwards? And if you draw a trend line, is it also sloping upwards or sloping downwards? Then what you want to do is wait for the price to test a strong trend line and MA, preferably a confluence, or wait for it to test a very strong support or resistance. And after that, you use price action for confirmation, okay, as well as your momentum indicator for confirmation. Now I know that this is hard to picture, so let me show you how you do that in a chart. So first thing first, look at the big picture. Are we on an uptrend or downtrend? We are on an uptrend. Price is making higher highs and then higher lows. Of course, while you're trading, if you're over here, you won't be able to see that. But one clue is look at your moving average. It's 50 above 100. Now I don't put in 200 because in this case, it didn't came down and test 200 SMA, so I don't want to clutter the chart. But when you're trading, make sure you add in everything that I teach you, okay? When I'm explaining, I try to make it simple, not too cluttered. So you want to look for buy trade. After that, you wait for price to come down and test your 100 SMA or 50 SMA. And if you want to look for confluence, then you can look for the third point over here. Because if you want to enter on a second touch, yes, you can do that, but then it'll be more risky. So if you are a risk taker, you can enter on the second confluence where the price touch trend line and also 100 SMA. But if you're more conservative like me, you enter on the third touch, okay, third touch of the trend line, of this trend line, okay. So next thing, look at momentum indicator. Does it give you an oversold signal? Yes, it does. Then right after that, look at price action for confirmation. So if I zoom in, the third touch is over here. Do you see any bullish candlestick signal? Yes, you can see a bullish engulfing signal. So you can enter right after this bullish engulfing pattern is formed, and then you can put your stop slightly below 100 SMA, and then you can ride the trend from there. One more example for you. Now this one I would say it is not that ideal, okay, because the third touch is right here. It is not testing any moving average, so if you want to enter on the second touch, it will be here, which would be better. So as you know, this is an uptrend, you can see, and your RSI is giving you oversold signal right there. And if you zoom in, can you see any bullish candlestick pattern? A morning star pattern, okay, I know it's not obvious, but you can see a morning star pattern. And then you can enter from there, and then you can make a good trade with good risk to reward ratio, okay. So try not to be so rigid and then be like, okay, every time I need to enter on the third touch, I must enter on the third touch all the time, because you need to be flexible, okay. You need to look at what is happening to the overall big picture, to the price as compared to moving average, okay. So try not to be so fixed and rigid. But in this case, it's actually quite safe to enter below 100 SMA because there's actually a support over here. Can you see that? So if you enter on a third touch, it is still okay. Still okay. Okay, we have a bearish trend over here. As you can see, price making lower lows, lower highs. And on the third touch, let's look at the touch. You see an evening star or a bearish army cross. So if you want to enter early, you can enter right after the bearish army cross is formed, instead of waiting for the evening star to be formed, okay. But the thing is, it tested this trend line for the third time, and it tests your 100 SMA, so that's a confluence. And then stochastics giving you overbought signal. So what you can do is that you can put your stop slightly above your bearish army cross, and then you can put your TP over here, enter right after the bearish army cross is formed, and then from this trade you can get about 1000 points. And because I'm looking at H1, you'll be holding your trade for about 3 hours. Now if you switch to higher time frames, daily time frames, apply the same thing, it's gonna take a few days before you take profit. So the thing is, you can apply this on any time frames, H1 and above, because it works just as well in the daily time frames as well as weekly time frames. I don't really want to focus on the minute time frames because I don't really like those time frames because it's too noisy. Some more, the amount of pips you get is very little. So if you are to ask me which time frame can you apply this on, I would say H1 and above. So if you apply this same strategy onto weekly time frames, then maybe you are going to hold your trades for more than 1 week. If you apply it onto monthly time frames, then you might hold your trades for more than a month. So this can be a day trading strategy, swing trading strategy, position trading strategy, depending on how long you hold your trade, which time frame you apply it on, okay? Depending on which time frame you apply it on. But definitely, I wouldn't use this for scalping. One more example over here. Bullish trend. Price tested about 1 time, 2 times over here, and almost a 3rd time here. And over here, you can see price test 100 SMA. And also, it gave you a morning star pattern, which is not super perfect, but still a bullish pattern. And stochastics give you an oversold signal. So what you can do is that, since there's a conference over here as well, you can put your stop slightly below the 100 SMA and the trend line. Enter right after morning star is formed. Or if you're more aggressive, you enter right here, right after this pattern is completed. And then you can put your TP right here, right at the recent swing high. And also for this trade, you get about 1000 points. And this is for H1 time frame, okay? Of course, if you apply it to the higher time frames, you're going to get more pips. So with that, I hope that this gives you a clear idea on how to use Trendline with confirmation. I'll share with you more in part 2. So with that, talk to you soon.